Hey world, let's unpack the global financial roller coaster. The dollar is soaring today, fueled by two major forces: fading bets on near-term Fed rate cuts and escalating tensions in the Red Sea. Buckle up, traders, because it's about to get bumpy. Dovish dive bomb. Remember those whispers about the Fed slashing rates soon? Yeah, they hit the brakes today. Hawkish comments from European Central Bank officials, paired with concerns about the Red Sea's fiery situation, spooked investors out of riskier bets and back into the safe haven of the greenback. Market meltdown. The Aussie and Kiwi, both risk-hungry currencies, tumbled as the Fed's dovish charm wore off. Even sterling couldn't escape the dip, inching away from its recent high. Eyes on Waller. Tonight's all about Fed Governor Christopher Waller. Can he reignite the dovish flame, or will his words fuel the hawkish inferno? Stay tuned, because markets hang on his every syllable. Red Sea rumble. The situation in the Red Sea is adding fuel to the fire. Attacks on ships by Houthi rebels and US-UK counterstrikes are raising geopolitical jitters, pushing investors towards the dollar's comforting embrace. Data deluge. Get ready for a data blizzard tomorrow. Chinese GDP and US retail sales are up, offering crucial insights into global economic health. Hold on to your hats, folks, it's gonna be a wild ride. Dollar dominance. The dollar index is flexing its muscles, inching towards 103.00. Meanwhile, the S&P 500 is feeling the heat, slipping down as risk aversion takes hold. Key takeaways. Dovish Fed dreams on hold as hawkish winds blow. Red Sea tensions stoke safe haven demand for the dollar. Waller's words and data deluge in focus tomorrow. Dollar reigns supreme, riskier currencies feeling the pain. Remember, this is just a snapshot of the market frenzy. Stay tuned to Forex Trading for the latest updates, expert analysis, and all the financial thrills and spills you can handle.